Good morning, Jags. This is Fahad. Today is Wednesday, July 15th. Uh, let's get started. So we have some really positive news on Moderna last night, which is causing a major spike in the S&P. When I went to bed last night, which was quite late, the S&P and Dow futures were up nicely. S&P was up about 25 points and Dow was up about 300 points. And I wake up and now Dow is up 500 points and the S&P is up 45 points. So we're adding on to the gains overnight session. And it's not just Moderna that is going to be sharply gapping higher. As you can tell from pre-market price action, Moderna is up about 15% in pre-market. Also keep an eye on AstraZeneca. AstraZeneca was the one that caused the overnight session in European equities to add to their gains, and that stock is going to be absolutely ripping higher when it opens, closed at 54 and is trading at 56.50 in pre-market. And if you look at technically on AstraZeneca, this is going to be a tight consolidation breakout after 3 months. So it's going to open around right over here, around 56.50. So it's going to be way out of its consolidation pattern, which means it's going to possibly make a run towards $58 to $60 per share. AstraZeneca is going to be a different news flow on this one. So keep an eye on this one because tomorrow, Thursday, there are rumors running around that the company has been working with Oxford in UK, and they will be presenting their vaccine data on COVID-19. And that is also very much an anticipated data for quite some time. So Moderna has its positive news out last night, but AstraZeneca news will actually be out sometime tomorrow or tonight when we are sleeping in the overnight session. And if it's positive, I think this stock not only will gap higher today, but it will add to further of its gains. This company has seen quite a bit of strong accumulation and call options in recent months, which you can also see in the Jaguar scans. So one to watch. AstraZeneca with potentially providing update tomorrow with Oxford trial that they have been running for quite some time. Now, with that said, I do have another stock that I want to quickly cover, which is F5 Network. Now, recently, in our webinar just last week, I gave a bullish preview on this one. Just to recap on this one, if you go to Jaguar website, you'll see on July 9th last week, I provided a bullish view on F5 Network, which was right over here. We mentioned that technically the stock sets up for a technical breakout. We have also seen some unusual call accumulation in October 145 calls. They have been actually accumulating that position since late April. There was an upgrade from Morgan Stanley last week as well, citing a strong revenue generation and financial position of the company. It's also a rather cheap stock. Unlike many other peers, it trades at only 16 times earnings. It's not expensive at all. And lastly, the company has a big partnership with Amazon AWS, which has been helping its bottom line. Now, why do I bring this all up again? I bring this up because, first of all, if you look at pre-market price action, this is actually now starting to break out. It closed at 144 yesterday, and pre-market is trading at 147.50. And if you look at the daily scale, that means we have a breakout that we had been anticipating on this stock. So put this line over here, and you will see there is that 146 trigger that went off on my screens earlier today in pre-market session. So it's going to break out through this resistance, and I believe this will start to clear all of this VOP congestion levels that's around this stock that has been in place since between 136 and 145. It's going to clear all of this. Very nice looking technical setup, and I think this stock on this breakout will get above 150, and possibly if it has a strong momentum, this could run all the way to $160 per share. Now, there is no particular reason for this in pre-market for this breakout. It's possibly just driven by the overall market strength. However, I do like to cover some further thoughts on the upcoming earnings report, which is going to be on July 27th. Looking at further channel checks that are coming out from the street, there is a good chance that the estimates on the streets are quite conservative, not only for the quarter that will be reported, but also for the third quarter, for which the company will provide guidance. The main reason for that is that Omdia Industry has been highlighting that F5's ADC market share is at all-time high. So they've been able to maintain and rather improve their position as the quarter has gone by. And then secondly, their hybrid, the adoption of the hybrid cloud applications and application security is showing some accelerating trends according to channel checks from Credit Suisse and from some other street estimates as well. They continue to dominate the global ADC market position, and the virtualization trends, which we also saw from VMware not too long ago, as well as Dell computers, they are also showing trends gradually improve for the overall application delivery network rather than solely cannibalize their other markets. So overall, this is a net positive as they continue to see improving trends without cannibalizing their other products. And lastly, less than 10% of F5's revenue comes from enterprise customers, and this is less than 10% come from those kind of customers, enterprise customers that have been most impacted. So if you bucket the category of customers the company has and separate out the ones that are in hospitality, in retail, in entertainment, in leisure, you put them all together and then you dissect the customer base, you find out that all those trouble spots in the economy represents less than 10% of the customers, which tells me that you're not going to see significant disruption from the company when they report earnings. It would rather be a very strong quarter because the remaining 90% of the business has been serving the industries that has done quite well throughout in the second quarter. So I like the fundamental view. I like the previews that have been coming out. I like the technical setup, and we have seen a steady accumulation, not huge, but steady accumulation in these October 145 calls. So I'm looking for a breakout and see if it gets above 150 and goes all the way to $160 per share.
And
Right?
Fahad, just want to add that it actually did get upgraded today by Collier Securities, who used to be known as Doherty. They're going from neutral to buy, and it looks like they have a 170 price target on the stock.
Okay. So I missed that one. So there you go. So there is an analyst upgrade out there, which is why the stock is popping a little bit in pre-market. On a long-term scale, I want to point out that once it starts to leave all of this congestion area, this VOP congestion on this breakout, you can see that there's a gap on the chart. There's an air pocket between VOP levels on the chart, which could potentially carry this all the way to 160. So that's why I have this line drawn, and if you go back to the daily scale, you'll see exactly what I'm talking about. There's plenty of air pocket from here all the way to $160 per share. So that's all I have for today. Chronicle.
Hey Fahad, a couple things this morning. First off, Barclays was out with a broad note on communications infrastructure companies this morning. Nothing really substantial or new in the note from what I'm seeing, but Crown Castle and Digital Realty, both long-term Jaguar favorites, did catch some overweight initiations as part of that note. We've extensively gone over the bull case for both companies over the past year or so, but technically I think both charts look great for some near-term upside. Both companies haven't confirmed their next earnings date, but they generally report closer to the back half of earnings season.
Yeah, that's a nice looking chart on Crown Castle CCI. Big beneficiary of the 5G trends as this company continues to roll out small cells in dense areas of the urban locations that are needed in order to make a dense network of 5G everywhere. Good, nice technical setup here for a bounce from trend support.
Yes, so and the second thing I have for today is just wanted to preview what I have planned for JaguarMedia over the next month or so. So basically, it's going to be a multi-episode project in which we explore one by one in detail each of the less talked about Chinese tech companies. So we're not talking about the big giants that all our subscribers already know a lot about, like Alibaba, JD, or NetEase. but rather we're going to be looking at some of the other names that haven't really been covered in detail, both by ourselves as well as financial media and sell side. So companies like Pinduoduo or Huya, Bilibili, 58.com, and so on. To be clear, these are not going to be outright trade or investment recommendations, but rather the goal here is to help everyone gain a deeper understanding of what these companies do and all the cultural nuances and idiosyncrasies that help make these companies a success, or in some cases a failure. Like we'll be talking about how these companies started, where they've come from compared to where they are now, the kind of demographics they serve, the growth strategies they've employed, as well as how the stock market is valuing these companies and much more. And the reason I've chosen to initiate this project is because a lot of the financial media out there hasn't really done a great job at fully explaining these companies and their business models, which results in a lot of investors and audiences having only a very vague idea of what these companies actually do. On top of all that, I'm also planning to talk about how to more accurately value and compare these Chinese tech companies in terms of looking at valuation metrics. It's generally a bad idea to approach Chinese tech valuation by saying they're cheap or expensive, in the same way most financial media and sell side approach valuations for, say, North American and pan-European companies. So we'll be covering that too, as well as providing our commentary on why we think the market likes or dislikes each of the Chinese stocks we're talking about. And on top of that, we're going to be providing a quick reference cheat sheet to go along with all of the in-depth write-ups. And what this cheat sheet will contain is a quick overview of the companies we've covered in the video series. And this cheat sheet will be updated with more and more companies as we go along. So if anyone's ever confused about what these Chinese tech companies do, they can always just refer to the cheat sheet, or they can go back and look at the write-up. So that's what's in the pipeline, and I'm aiming for the first episode to be out by the start of next week. I'm not going to reveal just yet which company I'll be covering first, but hopefully it's going to be fun and informative at the same time. So keep an eye out for that.
Oh my gosh, that's going to be so exciting to see. I'm looking forward to that. Particularly, there is there's something to be said that the overall trends that we have seen emerge in China are now independently benefiting from away from the U.S. tech space. What I mean by that is, over the years, over the last year or two, and particularly in this COVID world, where basically we're no longer expected to see any kind of deal signing between U.S. and China. We have basically started to see the world fall into two economic blocks, right? So there's a Western economic block where the U.S. becomes the leader with all the tech moves and all the innovation and everything, and then there is an Eastern economic block as the world gets split up, and the Eastern economic bloc will be ruled by China in terms of its new developments and technology and all of that. And as a result, you're starting to see that the companies that are emerging are starting to find themselves grow at a much more rapid pace because of the competitive concerns that have sort of dissipated. On top of it, they're also benefiting from e-commerce, COVID trends, and such and such. So as a result, there's a lot of opportunities in China. The only skittishness that we need to be mindful of is that many of these Chinese IPOs for the future, they're not going to be coming to the United States. But they will be out there, whether they're listed in Hong Kong or Shanghai. And I believe we're going to see many, many more of them. Looking forward to start of your series on Chinese companies and where the opportunities are. It's going to be a fun one to watch. I want to quickly circle on one stock, FLIR Systems, FLIR. This is another name in which we have previously suggested buying call options in webinar a couple of weeks ago. I'm not quite sure if the clients are actually still positioned into this name, but just as Chronicle was talking, this company it provided an updated guidance for the second quarter. So this is a pre-announcement, and it appears to me it is much better than expected. They now see their second quarter preliminary sales to be at $480 million, which is above the consensus view. And then also it's a sequential acceleration from $450 million that the company posted in the prior quarter. So the stock is gapping higher by almost 5% in pre-market. So keep an eye on this one too. FLIR Systems, this may actually run. As you know, many times I pointed out the FLIR system is a beneficiary of what could be a strong installment of its thermal business for taking scans and taking temperatures at the doors, or for any kind of customer that comes in, whether it's in public places like airports and such for COVID-19, or also in in non-public spaces, malls, small stores, or any kind of thing. The company sells those kind of imaging systems. So keep an eye on this one. Just announced pre-announcement that is better than expected. Nice guide up in the stock in pre-market. Jay.
Morning, everyone. So two stocks today. First one is IPG Photonics. Ticker is IPGP. B of A is out with a brief note today, more of a sympathy note, highlighting that Hans Laser, who is the largest supplier of laser equipment in China, reported, and a customer of IPG Photonics, they announced preliminary first half 2020 results today. And according to B of A, the Q2 net income increased 128 to 146% year over year, which was nearly 50% above or ahead of estimates. So needless to say, as B of A says in their note, the fact that the biggest laser equipment supplier in China just reported such a big beat feels noteworthy. And the chart looks good. This could move up to 170, even beyond that, finally break out. So keep an eye on that one.
Nice chart. I love these kind of patterns. After a 2-month long consolidation, MACD has corrected, RSI has corrected, similar to very much what I was just discussing on F5, but naturally a very different company. Nice chart, big bullish engulfing candle, and good update. Next one.
Next one is Rosetta Stone, RST. A client brought this up in Jaguar Live yesterday. And while there hasn't been any recent channel checks that I've seen, it's not covered by many analysts to begin with. I did just go back and take a look at the earnings transcript from Q1, and just a couple of quick thoughts there. Their bookings growth in the quarter was ultimately led by consumer language, that segment. And bookings there grew, it was 42% year over year and also 14% quarter over quarter. And they had noted that Q4, that has typically been the strongest seasonally. So the fact that they were able to post a 14% growth number in Q1, I think that says something. And then in their K through 12 literacy segment, bookings grew 22% year over year. Now, the one thing I would say that you want to focus on as we near their next earnings release, probably a few weeks away, in Q1, they announced a program called Learn from Home, which, as you can probably imagine, is because of all the school closures. So what this did, it allowed every existing customer to receive free, unlimited site licenses to any of their curriculum products. And according to management, since its introduction about 7 weeks ago at that time, approximately 9,600 schools took advantage of the free offer and either upgraded to site licenses from seat licenses or began their relationship with them. And so to put that number of schools in perspective, this brings us to more than triple the number of whole school site licenses we were supporting before the crisis began. So when Q2 numbers come out, that is the focal point you're gonna want to look at.
Yeah, and I imagine that that's not in consensus view. I haven't looked at how the consensus estimates have moved in the last couple of weeks, but this thing came out in the last 7 weeks ago, and this update is rather very fresh. So I doubt the consensus has adjusted estimates higher based on that, although I'm not exactly sure how big of a driver it is for the total overall revenue growth. Is it a significant piece? Any quick thoughts on that in terms of total revenues?
I don't know, just because this was obviously something that they had to adapt to because of the closures.
Nevertheless, I think that if it is enough to on an overall basis to improve the growth trends by even just a couple hundred basis points on the top line revenues, that's still sufficient, especially in an environment where every distance learning stock is getting re-rated at a higher and higher multiple, that should lead to a impressive breakout in the stock in my view. So that's going to be an element to watch on August 3rd, which is tentative date. Date has not been confirmed for the next earnings report. Great stuff. Love it. Avo.
All right, a couple of stocks that really we've covered extensively. I think Taiwan Semi reports tomorrow, according to my RBC platform. Can you just confirm that for me, Fahad? Yeah, they
Yes,
do.
July 16 before market opens.
Okay, so there was some option activity there yesterday. There was specifically January call roll. We went from January 50 calls were rolled up to January 70 calls. A couple of thousand or 1,500, I believe it was. I only have the open interest, which appears to have gone up. So that's one. I'm just reading some information, and I think this should be a pretty good quarter. And the next one is AMD, which is powering your new computer, Fahad. And that one too has a lot of positive data, and as well as in August 55, a synthetic long. So they bought 55 calls and sold to open 55 puts, 2,000 contracts each. This was yesterday.
I was going to cover also at some point today Taiwan Semi, because despite the stock having run up as strongly as it has in the recent weeks on very high volume, I do think that this company is still going to post a very strong quarter, and I think consensus will still move higher, and I think the stock will still be rewarded with more upside. Taiwan Semi, this is the Jaguar scan picture, and this as just a quick view to everybody who's not familiar. Jaguar scan is a very strict platform in terms of what kind of option flows it basically records in the system. I've created parameters to basically clear out all kinds of junk or ones that may even be a little bit skittish or unconfirmed in nature. So basically only picks up things that get filled on the order, on the offer, I mean, the ones where the dollar size bets are at least 10,000. The size of contract spots are at least 50 cents per contract. So there's all these strict parameters around it, and that's how it's built. So you get a very clean picture of exactly what the flows are doing. And if you notice, as Avo just pointed out, since last week, for the last 8 days or so, we have seen some stealth accumulation in Taiwan Semi upside call options, and I believe that this is going to power the stock higher even more. The breakout that has been happening has been on rather very significant volume, and I believe this has more to run. So looking forward to good earnings from Taiwan Semi. And AMD, just quickly on that too, this is still a coil chart after consistent 3 months of consolidation, and I don't think it's done yet. I think one of these days this thing is going to just rip through the $58 resistance, and we're going to see a clear breakout in chart.
And that one reports at the end of the month, AMD.
Yeah, so looking forward to a good quarter, because this has been consistently gaining market share from Intel and has a new product that also came out. And I believe that lastly, the gaming business is going to shine in the third quarter and the fourth quarter when the PS5 as well as the new Xboxes start to come out. Both NVIDIA and Advanced Micro Devices are major beneficiary of those trends. So looking forward to the strength in the second half of 2020. All right, guys, great stuff. Thank you very much for joining. We will see you in the chat room shortly.